Hi, everyone. We're on a fast pace here with tight schedule, so we're off to the next panel. We all want to know what the future of blockchain is, so you are in the right place. We have a fantastic set of panelists with diverse experiences and maybe not less important, a diverse set of views. So I'm looking forward to a very energetic discussion. Before we proceed, let me briefly introduce myself. My name is Shiman Kogan. I'm a finance faculty at MIT, and my research focuses on behavioral finance, which intersects finance, psychology, and computer science. So I'm comfortable being at the edge of different fields. So that naturally led me to interest in fintech, and I developed both research agenda and teaching of that field with blockchain emphasis in particular. So just in terms of structure of the panel, I'm going to let our panelists introduce themselves, and so we're going to have some opening statements. I have some questions prepared for them, and then hopefully we'll have lots of time for Q&A. Now, I'll let you guys introduce yourself, but in doing so, it'd be great if you could tell us a bit about your background, obviously, but also how you see the future of blockchain or not, and how that informs both your career and the organizations that you're part of. So, without further ado, Jimmy, do you want to go first?
Sure. My name is Jimmy Song. I have been a software engineer for about 20 years. I'm currently a venture partner at Blockchain Capital. So, I joined them 3 months ago. I do mostly tech due diligence and things of that nature. I've been coding in the blockchain space for the last 5 years. I started doing work with Color Coins back in 2013. I've gone on to, I did some open source work with Monetas. I was VP of engineering at Armory. If you guys don't know what Armory is, it's one of the most secure wallets that you can have for Bitcoin. I worked there for a number of years. And most recently, I was at Paxos, which is a financial services firm. They also have an exchange ItBit, but I work more on the private blockchain side, so I have some experience there as well. But mostly, I come from a very much technical background. As far as your question as to the future of blockchain technology, that's something that I feel like we should leave for the panel, and I am going to let my fellow panelists talk about that first before I give my opinions on it.
Okay. All right. Radia, do you want to?
Okay. So my name is Radia Perlman, and I work at Dell. And I don't really do anything with blockchain other than people trust me to kind of understand things and explain it to them. So it was very difficult to actually figure out how blockchain actually worked, because most of the things on the internet are just, it's transformational. And so I was one of the very early blockchain skeptics. I do have a paper sort of explaining the technical things that if anybody wants it, I will forward it to them. It's my name with a period in between at Dell.com. So let's see. Yeah, I see all sorts of confusions around this. For one thing, what exactly is blockchain? So I was actually with a bunch of researchers who were researching blockchain, and they were talking about all these, you can change anything about it. Any sort of technical thing that I, sort of objected to about it, any property, they said, well, that can be changed. So at this point, I would be unable, if you gave me a technology, to tell you whether it was a blockchain technology or not a blockchain technology. And actually, I asked the researchers to define it, and they were arguing amongst themselves, where is the boundary? That's hopefully this stuff will come true in the panel. But as I tell people, the hype might be sufficiently successful. The way that I believe people should approach things as engineers is figure out what problem you're trying to solve and look at various solutions. Whereas a lot of people I see are saying, how can I apply blockchain to this? So if you go from that and solve the problem with the best possible technology, calling it blockchain, no matter what it was that you did, might be the right thing to do. So anyway, we'll get into this more during the panel.
I promise.
So I'm coming from a different perspective. And my background is I spent 12 years at Intel and actually made the first WiMAX chipset. I was the GM and launched that business at Intel. And so I was there for 12 years and then left and was recruited by an ex-Intel buddy to get involved in wireless power. So I've done that for 5 years, and then an Intel buddy recruited me. It was only 4 or 5 months ago, and Accenture to look into blockchain. And to be right up front, I didn't really know much about blockchain at all 4 or 5 months ago. And I think that's pretty much the general population really doesn't know what it is. And that's why it makes it harder to explain, because it's a concept that people they may not have even heard of the term. And so during my tenure, what I've been doing has also been running industry orgs. So what you're going to hear from me is a little bit different, because I'm a champion, a proponent of standardization, structured organization, and that's what I'm going to just go real briefly through a slide deck, and it's not going to be boring. I'm just going to show you the slides because they'll be available for you if you wanted to get a copy, and I'll talk to you a little bit about why our organization exists. So there we go. There we go. I got it. Found it. So this is all about pioneering new frontiers. We all know that. And how I know, I can tell you, is because the analyst firms that call me, they don't call me up. It's the opposite. Typically, whenever you use an analyst firm, they always go by past history, and then they have a future predict. They don't know. And so that's my litmus test, because I don't hear from them. And I probably wouldn't hire them yet to do any kind of forecasting for me. So, but this organization started, and I'm the executive director of the Enterprise Ethereum Alliance, is about a little over a year ago. Vitalik and a number of other folks saw that there was a need, in addition to the public mainnet, which is all about digital currency, et cetera, there needs to be another entity that deals with enterprise. And that's what I'm going to talk about, solely enterprise. We're not involved in digital currency at all. And so they decided to form an organization. And it's a standard. We want to be a standards organization. And the reason why is if you have a standards organization, you have more trust. You have definitely an understanding of what the specifications are, and assurance if you have a certification program. And so that's what we did. We launched a program. I'm just going to scan through these really fast. We have a board of directors that's impressive. You already mentioned Santander. They're on our board. Many of you have heard of the company Consensus. They're very active in this world. CME, Accenture, JP Morgan, BNY Mellon, Intel, Microsoft. And so that's my board. And those guys are all recognizing there's something there with blockchain, or they wouldn't be involved. And these are the biggest banking institutions in the world. Plus, I've never seen it happen this fast and growing industry orgs. When I started three months ago, there were 300 members. Now we're actually at 500 members. So it's 500 companies they're global, or all want to know what they can do and how they can do something using blockchain technology. Here's the cross-section, so it's not just the United States, it's all over the world. And so what we do, and you brought about the mention of use cases, we have user groups, and we have aviation, health, insurance, you name it. And then those user groups, basically, it's almost like a meetup. They try to figure out what are the use cases that they're trying to solve, the problems they're trying to solve, and then they determine whether it's blockchain can do it. So it's true. You really do need to figure out what the use case is, and then if it makes sense, they roll it into an architecture stack and a standard specification so that folks can actually test, and then ultimately in a year we'll have a certification program so we can have multiple vendors of choice. So I don't know how many folks here from different companies are looking for solutions. The idea is you'd like to have multiple vendors of choice as opposed to working proprietary vendors, and that's where we come in. You heard mentioned some of the solutions here are proprietary. We don't believe that's the best way to go. We believe that you're better off betting on standardized solutions that entities get involved with. So we have multiple companies working on clients, for example, BlockApp, Strato, Clearmatics. You also have the JP Morgan Quorum, and Consensus has their product called Pegasus, and many others. So I'm going to skip all this on and go right here to how do we get to the point where something isn't vague? I come out of telecom. You create an architecture stack, and so we just finished this. So actually we'll have a press release in a week. And since I came on board, I was wondering where's the structure and organization, and it really isn't there anywhere where you have a stack or an architecture so you could build a specification for. And so you're the first guys who are even seeing this. And offline, anybody would like to have some more information on it, you're going to get a copy of it. But this is going to drive the future of the 120,000 developers in the world of Ethereum who are making products and services on it. So I only have 7 minutes, so I'm just going to show you that we have use cases, we have specification working groups, and we have a roadmap. And within a few months, we'll publish our spec. And that's moving very fast because I come out of IEEE, 3GPP, and many industry standards orgs. I've been through the gamut. It typically takes three years to write a spec. We'll have our spec out in a year and 4 or 5 months. And that's because everybody lives in, I think we call them dog years. 7 years is really 1 year. We live in the world of dog years. That's how I talk about it, because it's crazy how fast everyone's trying to move in it. But at the end of the day, that doesn't mean they're all bringing money in. And that's going to be the problem to solve. How do they all survive while they're trying to figure out what to do? One last thing, our org is committed to social impact, and when we talk more, I'm going to share with you. There's a whole bunch, there's significant other benefits to blockchain, and I'm a big champion of this, and I hope that comes out in the talk tied to the World Economic Forum, United Nations. I can share with you lots of examples how you can use blockchain for social impact and the greater good. That's it. Thank you.
So, to be a little, I'm going to start with a higher level question and dig deeper, but what are some of the use cases that have you sort of most excited, or you see having most impact on society? I'm going to speculate, but like 10 years down the road. And if you want to be even more committed in terms of an answer, what do you think is the first blockchain company that will enter the S&P 500? Okay, so I know that's very brave kind of bet, but anyway.
Well, yeah, I'm sort of not going to exactly answer the question. I see, I see a lot of things where people treat blockchain as sort of a black box with magic properties that, by the way, it doesn't have. It's not secure, it's not immutable. But at any rate, just assuming that it's a black box that you can store data and retrieve data, they get so excited about how it is applicable to pretty much any application that needs to store and retrieve data. Now, it's not clear what the blockchain-ness of this black box provides other than the internet, a way for people to communicate, or Facebook, a place to post information that other people can read. So, it seems like the basic design, which was this anarchistic view that we can't trust these evil governments and evil banks and so forth, and we don't want them constraining our lives by making us pay taxes and all that kind of stuff. It led to an extremely interesting design where there's no known entities in the middle. Well, that's the fundamental novelty. I'd never seen anything like it, which is the equivalent of digital signatures, but without any secrets. There's nothing that the authorized guys know that make them any easier to create an integrity check. So it's the notion of integrity checks without secrets, which is one of the technical issues with the public thing, which makes it so enormously expensive, because they say, well, we're assuming for security that the mining community has cornered the market on compute, so that nobody else could amass more compute power than these. And whereas with digital signatures, like cryptographers have invented this wonderful stuff where there's an enormous gap between the compute necessary if you're authorized, meaning you have the private key, and not authorized. So let's see, the question about...
Is there a use case that
so cryptocurrency kind of works, but it's phenomenally expensive. But for all the other things, there's absolutely use cases, but I don't see why a cloud or, doesn't provide the same functionality.
Yeah. Okay.
Well, yeah, go ahead.
Okay. I don't think the cloud has anything to do with it. I think I'll give you some examples of the future, Pat, because I'm seeing them with what I do, and they're really exciting. For example, there's one called Pumped, because bottom line, how we get news and the quality of the news is horrible. So there's a blockchain company called Pump, and what they'll do is you're going to get credits by selecting what news you want to pick from. And you have the ownership of the news that you get, as opposed to what you get now, where, let's say, whenever you log in, it comes to you. You don't have any choice. So that's an example of filtering information in the future. I think is going to be very interesting because we have too much information coming into us. You can use blockchain really for basically a self-sovereign identity for whatever you do. And so that's where I see the future is the usage of self-sovereign identities, and it could be used for health, for example, where you actually have your digital iris scans can be stored in a blockchain through smart contracts, and your fingerprint, facial recognition. All these things are being worked on right now. Particularly the United Nations and other organizations are working on trying to figure this out because there are billions of people out in the world who have no identity. Right. So future, ideally, the world, most of the people in the world will actually know who they are and prove who they are. Right. And that's going to take a while. On more current stuff, supply chain issues, lots of workings on it, because one of the models you heard is still different ledgers, but to have an open ledger that's a private ledger, so it doesn't matter if it's in the cloud or not, because it's an enterprise solution, and so you'll see. That's why there's so many companies in our org. They're all working on a permissioned, it's not a private net, and they don't care about the public net. Some of the solutions don't even go after the public net.
Jimmy?
So what I'm going to say is probably going to be unpopular in this room full of business people, but I'm just going to say it. So I think, first of all, what we're talking about, blockchain, it's kind of a buzzword, right? Like, all of you guys are here because we're at a blockchain conference. What the hell is this thing? And I think Radia is right. It's become like this generic word that really doesn't mean very much. As a computer scientist, what you can say a blockchain is, it's a linked list of blocks. That's all it is. And you can make it mean whatever the hell you want. And what people are using the word blockchain for is some sort of a distributed database with some permissioning and fine-grained access control lists or something like that. That's something that you don't have to utilize with whatever it is you're building. You don't have to do that. And this notion that we can use blockchain to do this or blockchain to do that in a private setting doesn't really make sense. And I say this as somebody that worked on something like this for 2 years at Paxos. It's almost every single one of these projects that purports to be this enterprise thing that's utilizing blockchain doesn't actually do what it says. It's mostly centralized. It's a single point of failure. The only thing that's actually not centralized, as far as I'm concerned, is Bitcoin. That's the only thing that's managed to actually be decentralized as a result. It's hard because as probably a lot of you in this room are like business people or something like that, you rely on sort of like social signaling. All these other people are into it. Oh man, I have to go look at it. No, and everyone's sort of afraid to say that the emperor has no clothes. Well, the Enterprise Ethereum Alliance, Corda, all of these things, I've looked into them. They all have a central point of failure. They have a central database that you need to trust. You're not getting any of the benefits. It's mostly sort of this buzzword bingo or something like that. It reminds me of like 1999, 2000. I was fairly new to software engineering, and I still remember there was this huge buzz around Java and XML. Do you guys remember this? I don't know how many of you guys were around back then. All these business people would demand Java and XML in their products. And as a coder, this confused the hell out of me because it's like, why the hell do you need Java and XML? Why do you care what the technology is built on? Don't you only care about what you're using? But no, because, Sun and all of these other companies were like just pushing this thing to executives and CEOs, it became this signaling thing where if you didn't build on Java and XML, now you were sort of like a pariah or something, and that you weren't with it, and you're not with the bleeding edge technology. That's what blockchain feels like to me. And I know we're at a conference where we're supposed to talk about the future of this stuff. And I'm going to tell you, you need to define this thing very closely. And the thing is, like, we had this email back and forth before, we were on this panel. We've been emailing back and forth for a week. And one of the things that Radia pointed out was, okay, we really need to define what the hell this thing is. And then they got into like a little email fight and stuff like that. I'm like, save that for the stage, guys. Save it for the stage, because that's actually kind of important to actually debate. As far as I'm concerned, it does not have a very good definition. It is very vague, and even the presentation we saw about the Ethereum Enterprise Alliance was very vague. He said it's a very complicated thing. Well, if you can't explain it simply, what the hell is the value? To me, that's not really valuable. I can explain to you what Bitcoin is. It's a distributed ledger. Everyone is self-sovereign over their own node. Everything else that I've seen, that I've examined, has a centralized point of failure. And that's not a blockchain as far as I'm concerned. The only thing that I think will last in 10 years that's actually distributed, that's actually decentralized, that actually allows you to control your own thing is Bitcoin going forward.
Wow.
Thank you. So when you're saying, I'm going on off script here, but the whole thing is off script, right? So is your point about point of failure is about governance? Is this the issue? Because it's not
about governance. So when you have something centralized, and I have issues with the last panel that we had, right? The Ripple guy was up here saying like Napster was the first one, and look at how they failed. They failed because they had a centralized point of failure. Is BitTorrent continually going? Yes, it is, because it doesn't have a central point of failure. It's a distributed system. That's the sort of thing that Bitcoin is. And all of these other things that are trying to be, okay, we're going to do blockchain with this, blockchain with that, they're not really decentralized. There's no innovation there. It's just a database, guys. It's just a database with some permissioning. Okay? It's kind of like the Java XML thing. I mean, I hear business people say stuff like AI or cloud or something like that. AI means an algorithm, Okay? That's all it is. Cloud means somebody else's computer. That's all it is. Okay? Like, don't make it out to be something more than it is. Blockchain is just a database, okay, with certain properties. Okay, maybe you have replicants in various places, but it's not something that's magical that will solve all your problems, and that you have to like suddenly like adopt this thing because it's like the leading edge of technology, and you're not going to be with it, or you're going to miss the boat because you don't know what the hell it is. That's not what it is. Okay, you need to know that it's a database. It's not anything interesting beyond that.
Okay, so that's a good segue into my next question, which is, do you think so? I mean, and I'm sure we'll hear different answers, but is it fundamentally, to the extent that we can even agree on what this technology is it a fundamental technology that enables sort of more efficient delivery of existing services, or do you see the possibility for fundamentally new services or products that this technology gives rise to?
Well, I think we know the answer from this side of the stage. So this is entertaining, that's all I can say. I think I share with you what my background is, and if you take a look even at the internet or any of the tech, and I come out of telecom, you talk on your phone, but if you ask them to explain how a telecom network works, I disagree with your point. It's extremely complicated. And same thing goes with even how the internet works. Most people don't know about TCP/IP and all the things that you need to know. And it's the same thing that's is happening here with blockchain. So I disagree. Yeah, blockchain and it's not blockchain. It's the whole notion of a specification that deals with the aspects of what I shared with you as an architecture stack. And it does a lot more than just being a database. You have all kinds of security, you have scalability, you have permissions, you have all kinds of other aspects that you would want to see built into a solution to solve a problem that maybe this kind of technology could help. So I'm a little surprised about some of the comments that are being made. But all I can say is that we have 500 companies in our organization, and it's the biggest in the world. And I've got to believe that they're betting on something more than your opinion. But in any event, I'm seeing the results of solutions, and I wish we could share with you. I'm going to be at Synchronize in New York, and then there's a Consensus 2018 event. There's hundreds and hundreds and hundreds of solutions coming out through folks, not just through ICOs, folks who are developing solutions like Upor, and companies like Consensus. So I would suggest you go do a deeper dive before you make your statement, and actually look at some of these companies and actually see what they do, and you may have a different opinion.
Okay, you're accusing a software developer that's been working on this for the last 5 years that I haven't dived deep enough to understand what it is you're talking about.
I guess so.
I will point out that I have looked at a ton of projects. Almost every single one does not have users. That tells you everything that you need to know. Not a single Hyperledger product or Corda product seems to be utilized by anybody that's anything more than a press release. We were talking about this morning on our show. I do a YouTube show every day with Tom over there. It's like this stuff is proof of news, right? Like that's all they have. It's like, okay, we've made like 30 press releases. Therefore, we have 500 companies. What the hell does that mean? Okay, you made a press release. That doesn't mean you're actually utilizing it. And a lot of these companies, it's like, okay, we're going to make a press release so we look like we're on the bleeding edge of technology or something like that. There's a lot of not much technology in this stuff. Okay, I've looked at a lot of these products. There's actually not that much there as far as I can tell. I'm open to being wrong. Maybe there are like projects that actually do end up using some form of specialized database. But I think I can explain TCP/IP like in a rather relatively simple way. It's just packets going from one place to another, and then we reorganize them at the end, right? Like it's a form of communication. You can't explain that with something more complicated and just sort of hand wave it away. That to me is the sign of a scam. And that's what this whole thing is.
So,
for me,
wow.
a large part of it.
So Jimmy, like, you're a venture capitalist, right? Investing in this space. So how do you approach investment opportunities, given your views?
Yeah, I mean, like I said, I'm a technical due diligence guy. So most of the time, I crap on things that come through, right? Like it's all right. Here's what's wrong with it. Here are the things that you need to think about from an incentive structure. And let's and 90% of the time, I'm like, okay, this is actually pretty centralized, and you should be very upfront about that. And if you are centralized, you really need to use this buzzword because you don't really need to, and you can still have a decent business. And you know, that's sort of how I approach it. But yeah, I mean, I don't expect everyone to agree with me, and you know, I have partners that think about different projects in different ways, and that's okay. You know, like having some disagreement is healthy in any sort of firm. So, to me, a lot of what we're talking about and what we've examined, there's like nothing there. And like you dive deep into like half of these white papers, and it's just kind of like, okay, like a 5-year-old can figure out a way to exploit this. And the thing about like anything with immutability, high availability, and auditability, and all of these things that blockchains purportedly give is that these are not simple things to build, and these companies are sort of like used to sort of like a web time frame where you can go from concept to launch in 6 weeks, and they're saying, okay, well we're going to do the same thing with this really complicated blockchain project. That's not how it works, guys. You need to think in terms of like a few years to figure out how to secure it in a way. You're playing with people's money, right? You're not going to get a 404 on a web page and be okay with it. If you have a bug in this stuff, you're going to lose people's money or something much more critical where you do need auditing and things like that. So to me, like a lot of this is just kind of snake oil-ish to me, and that's okay. But this is where if there are actual projects that come out of it, well, they'll have to have survived some serious attacks against it. But that's a good thing. And there were a lot of scary things in the .com era too. I mean, I'm sure you guys that lived through it remember, right? Like there was so much hype around. Okay, the internet's going to solve everything. Well, no, it couldn't, and a lot of it was just badly executed. That maybe came through later. I mean, I look at a lot of these projects. It's a bad .com idea with blockchain in it somehow. Like that's like 90%, or some token or something like that. That's 90% of what seems to be out there. So filtering out the weed from the chaff is a challenge, but that's something that you have to do. But you have to actually dive in, right? And this is a message that I want to give all of you. Dive in and actually learn this stuff instead of playing buzzword bingo, okay? Like, okay, all right, there's blockchain, there's token, there's ICO. All right, let's invest. That's not, you're going to lose your money that way.
So I would encourage you to dive in, and I'll give you a couple of examples, and I have a giant list because I can't remember all of them, and I told you I haven't been doing this that long. But for example, based in New York, the New York State's new energy strategy incorporates the usage of energy sharing. So there's an initiative called that it's LO3 Energy. It's a technology that's reforming energy exchange, and Siemens is developing microgrids in Brooklyn, so people who can then use smart cells or any kinds of ways of energy storage, of course, then they could exchange and sell energy back and forth. There's a number of other entities. The government of Chile just launched one and they're usually smaller entities where you own your own power, and you don't want to sell it through a brokerage. And so this is already happening. I can give you multiple examples. You can call them up. I'll give you their phone numbers. And then you can, this is already in the works where I can then sell my energy, but I don't have to give up who I am, the information that I have about who I am, and you make your exchange through a token. It doesn't have to be digital currency token. They issue tokens, and tokens can create their own value that's centric to that particular niche.
Right.
And so that's how tokens are being used. It's not being used as cryptocurrency. And in fact, I don't know if you saw, like, the state of Wyoming approved some things as far as some regulatory activities, because you can look at the issuance of, if it's an issuance of a security, for example, that's a no-no, but if it's sold to a consumer, it's okay. And so if you issue a token and it goes to a consumer for a purpose and the value of the token remains with that entity, then there's a fair amount of regulatory interest to go ahead and consider that.
Yeah, so just because you're using blockchain, anything that needs a database could pretty much use blockchain, probably less efficiently and less robustly and stuff, but you can kind of use it. So, just evidence that people are using it does not necessarily mean that it's, people have had databases for a long time. Yeah, and one thing that I tell people that is kind of the killer thing you can do with blockchain is raise venture capital. Just say that your company is... And I'm happy that not all venture capitalists will throw money at you if you say that.
Yeah, a lot of this stuff is, okay, there are these use cases that are private and you don't get to look at it, and we don't, and we get to define what blockchain is. Okay, all right, so you're saying that we can call up somebody and we have to trust whatever they say? I don't know, like that to me is just sort of like a black box. Trust me, there's something in there. I don't see how that proves anything to me. If it's a public blockchain and we can actually examine the code or something like that, then maybe we can look at something. Like I said, like, blockchain is very ill-defined here. It's 90% of the time it's probably some sort of centralized database with fine-grained permissioning, right? With proofs on whether or not you're a laptop data row. I mean, it's not exciting technology to me. It's more or less something that you can play with and maybe you can even utilize, but it's not that interesting. And the reason why it's not interesting, let me do a little bit of a technical analysis here. The reason why it's interesting, why you can have a distributed thing and Bitcoin itself is interesting, is because there's proof of work. Right? You need to expend energy, and there's an objective measure of which one is right. Almost every other scheme in the private blockchain realm does not have that. You either need some sort of like privileged nodes that figure out what to do, in which case they're the centralized party in some way, shape, or form, or they go further. It's like a single entity that decides what is right or not. And that's not interesting. That's just a database where you have a central player, and then everybody else is sort of replicating off of that. That's not interesting. The reason why you need everything, why proof of work exists, is so that you have an objective measure. These things don't have an objective measure. They don't have proof of work. Therefore, they're not really that interesting or are capable of decentralization.
Yeah, by the way, decentralization does not equal good and centralization equal bad. Sometimes centralization makes sense. And so for instance, if I pay somebody with Bitcoin and they don't ship the merchandise, who do I complain to? Whereas if I'm doing it with Amazon or eBay, there's someone to complain to. So most applications do require adult supervision. And for those, like the whole decentralized kind of thing is not actually a plus.
For a lot of things, but for sound money, I think decentralization is absolutely critical. But with a lot of other things, with buzzword bingo and all that stuff, it doesn't. I don't think it matters.
So with that, I'm sure the audience would love to ask the panelists some questions. So go ahead.
So you mentioned a proof of work as being a core piece of why Bitcoin is interesting. Mm-hmm. There are other mechanisms to add to the chain, and you're suggesting that there's I'm curious of the other folks on the panel, what mechanisms for adding the chain that add that same level of confidence that decentralization of blockchain has had.
So proof of work is it's really consensus mechanism based on the Byzantine generals' problems of whether you trust the guys on your side or not. And so it's not used in, for example, in our org, what we're looking at, and I'm only speaking from enterprise. And so the companies like JP Morgan and all those guys, we're not using proof of work, we're using one's called RAFT and then PBFT, because the reason why is you don't need that proof, you don't need it. And so what I think you guys are missing is that I'm solely talking about enterprise. I'm not talking about the public mainnet where everybody's going to buy cryptocurrency and see what happens with it. You're right about one thing. It's another implementation of how you can conduct and streamline your business. And there's some really good ways that you can use it, and it's not just a database. It deals with all kinds of security issues and et cetera. But I don't think that I know they're not using proof of work. There's another thing called proof of stake, where the bigger shareholder has more of the say. They're not using that either because it doesn't make sense. And so there's others that, if you want, I can get you more information on it.
So can I just respond to that real quick? So you can have some sort of other mechanism to do that, but at that point you have to trust the people that are making that mechanism. And if you need to do that, that's fine. And you can call that blockchain even, and that's fine. I don't know what that really gets you over some sort of like centralized service with database replication. And all of this like security aspects you can do in other ways that are much cheaper. If you don't have proof of work, it's not objective, right? Like if you have signatures or like leader election or something else that you need for any sort of consensus mechanism, you either have to trust lots of people to act well, and it's not an adversarial network, in which case there's no real value to having it replicated. If you already trust people, then just make a centralized database. Right. Why the hell do you need everybody else to act a certain way? Like it doesn't really make sense to me from that perspective, and you can look at it in that way as well. But one thing I want to point out is that if blockchain is sort of the buzzword you need to use in order to upgrade the IT infrastructure of your company, then use it. All right, that's fine, right? Like, because a lot of industries have like very old IT, and this is what they're, like consultants need to sell, and this is the latest buzzword to sell an IT infrastructure upgrade. Great, go for it. But don't act like it's something like super crazy or interesting. I don't know.
But just before we come at, just to sort of. No, I don't know if challenge, but provide a different view on this. To me, the question is not whether you can, like I think there's probably a meta theorem that says whatever you can do decentralized, you can do centralized, and in theory it'd be more efficient because you're not duplicating efforts, etc. But as an economist, the way the central question for me is not whether you can technically do that, but whether the value accrues to a central entity or is distributed differently. And I think so. You haven't really talked about that, but I think that to me is a really important aspect.
I agree. If you can do it decentralized, then there can be value because you can have adversarial actors on the network, and it can still sort of work because there's some objective thing. But what he's talking about is like some other consensus algorithm where you more or less have to trust everybody. In which case you're already centralized, right? If you're not gaining anything with decentralization in that case, because you're already trusting people. It doesn't really make any sense.
No, the reason why that they do that is and it deals with accounting reconciliation. If you were to go ahead and agree, and let's say in a supply chain, you will trust because you do all your credit checks. You can put all those things in smart contracts. oracles. There's a lot of things going on in the oracles, which are applications. You can have off-chain solutions that all roll into your smart contract, and so that you can conduct business. But I want to share with you something that I think is really important. It deals with social impact, and it's a huge problem, and it has nothing to do with this, but it has to do with the problem solved. There's 2 billion people in the world who don't have identities, who don't have bank accounts, and they can't get credit. And so I listened to one talk at South by Southwest that most of the coffee that you get are from women farmers in Latin America and other countries. And they have no way to get a bank account. And so what happens to them, they get the microloans, and they're paying 40% interest for the loan, and basically they are stuck. And there's no solution for them in today's world to do what you're saying, which is have a central bank, because they can't even get the bank account.
Yeah,
right?
and we have actually 2 excellent sessions later today.
And that covers
focus
that?
on that.
All
yeah.
right, good.
So, yeah, there's a question in the...
Well, actually, let me just say one thing.
Well, maybe we'll... Yeah. Go ahead.
I have 2 questions. One is in regards to proof of work. There is something called POET, proof of elapsed time, that Intel has come up with. You don't have to spin your wheels and spend energy to, get the university hash to be necessary. So POET is one thing to go about. And the second thing is with respect to investment. I don't go the traditional way of business planning, which you say how many customers you have, how much revenue you have, and the roadmap and so on. So that's probably a better indicator than just look at some website.
So, in the interest of time, maybe you answer the latter question, and kind of, if that's okay.
Well, I can talk about proof of anything other than proof of work. Here's what it always comes down to. If your human action can allow you to, sort of have the right to publish a block, and usually a block gives you some sort of reward because the network is paying you to publish that block because it's some objective standard. Then you are, and say it gives you like 10x coins of some kind. Then economically, it makes rational sense to spend up to 10x coin in order to have that right, because your reward is at least 10. Well, if it's proof of space, proof of time, proof of stake, proof of whatever, you are rationally incentivized to spend up to that much. Now, like with proof of work, we know exactly what you're spending. It's electricity. It's capital investment in mining equipment. With something like proof of stake, proof of space and time, proof of whatever, it's not obvious what it is that you're staking. Maybe you're DDoSing all of the other stakers. Maybe you are like renting huge farms of AWS servers. Whatever it is, it's not clear what the economic input is, but it's exactly the same. You're rationally, economically, rationally, incentivized to spend up to that much. So I don't really see the advantage there. Like instead of something that's clear what the inputs are with something like proof of work, you have something that's completely obscure and you have no idea what the inputs are. It's just, okay, well, I guess we're just giving them the reward. We have no idea how much they spent or what they spent it on or whatever. That to me is why proof of work is the best one.
So, sorry, it looks like we could have stuck around and with this exciting panel for much longer, but I'm getting very anxious signals that we're out of time. So join me in thanking them.